All right, welcome everybody. My name is Brian Hartman. We are here at the Live at 5 Pharus Global at 1859 Southeast Port St. Lucie Boulevard. We are up to episode number 8, I believe it is. Let's check that just to make sure. Episode number 9. Things are rolling over here. So today we have a very special guest. His name is Dennis Edwards, and Dennis is the Vice President of Business Development for National Credit Partners. And we're going to be talking about how to increase your cash flow by restructuring or consolidating your business debt. I think, unfortunately, but maybe fortunately, there's going to be a lot more opportunities to come to be able to help businesses be able to do this. So we're excited to have Dennis on. For those of you who would like to connect with us here, you can go to our website, pharusglobal.com. What we like to say is we can help businesses from the cradle all the way to the grave. We have multiple different entities under one roof. When you go to pharusglobal.com, you can click each logo for each entity, which will take you to the corresponding website so you can learn more about what we do and actually schedule a meeting with us if you'd like to. One housekeeping issue, if you'd like to ask Dennis a question when we get there, please add it to the comments and we will be able to do so. You can also say hi. We are live. So without further ado, let's bring on Mr. Dennis Edwards.
Good afternoon.
Afternoon, Dennis. How are you?
I'm doing well. Thanks for having me, Brian.
Glad you can be here.
I know today's a crazy day and a lot of anxiety out in the world, but we're going to try and just talk about business for a little bit here.
Absolutely. Love talking about business, don't you?
Yes.
Yeah. Let's try to put all the rest to sleep. I don't even think we're going to know the answer tonight, so who cares? Let's just keep going from here. So you and I connected. Gosh, it's been several months already, right?
Yes.
Connected, and glad we did. You know, you've been a tremendous help to some of our folks. And why don't you give us a little bit about who you are and how you got into this industry?
So I've been in financial services. I was a professional musician when I was younger, and then I was in the mortgage business and kind of rode the wave. And then, as many of you experienced, 2008, 2009, a lot of that kind of all fell apart and kind of slowly transitioned. You know, worked for a while as a recruiter, tried to go back into mortgage. And then someone that I had worked with in the past in the mortgage business introduced me to National Credit Partners and, you know, kind of the business financing side. I had done, you know, traditional SFR type residential mortgage. I had some experience in hard money, but I had never done any business financing. And this was a whole new world. And I really was not aware of, you know, the fact that after the recession, financing for small businesses completely changed, and traditional bank financing was very difficult to obtain. And so, you know, there's term loans, there's lines of credit, there's invoice factoring, but there's also, you know, these cash advance type loans, which I had never heard about, you know, fintech and all of these online lenders. You know, I'd heard of Cabbage and Lonely. And so I found out about all of this type of stuff, and I was like, wow, this is a whole nother world.
Yeah. And
I saw how many millions of business owners were taking this type of financing, and I realized, you know, there's a huge market here.
Yeah, it's almost scary, those MCAs, as they call them, right? And now Cabbage was actually purchased by American Express, I believe, right?
Yes, correct.
It's amazing all the consolidation that's going on out there.
Yes, and On Deck was purchased by a large partner as well.
Absolutely.
You know, those are two of the larger, you know, lenders in that space.
Right.
Our company at National Credit Partners, you know, our focus was to try and find solutions for business owners who are in trouble, you know, by figuring out a way to restructure or consolidate, you know, the existing business debt that they have if we're not able to get them financing or their lender's not able to get them financing. So it was kind of a hardship type program. And, you know, the owner had experience in debt relief. He had been involved in consumer debt relief in the past and had built a very successful company, and, you know, moved into the business space about 7 years ago, and slowly over time started building up the company. And then I was brought in, you know, kind of to do a variety of things to build up the business, to build up partners. And then, you know, I became an advocate and a proponent, and, you know, now I've risen. I'm vice president of business development, and, you know, work with different partners and business owners to try and help them, you know, survive not only the pandemic, but an uncertain economy.
So I think, you know, from my experience, Dennis, there's a lot of businesses that almost kind of get trapped into the, oh, I could get cash fast. And
Right.
don't necessarily look at all the terms and what that really looks like as far as repayment is concerned, right?
Correct.
So a lot of times they end up having to make rather large weekly payments, and sometimes daily, I think, right?
Correct. Yes.
What are, you know, just curious, but what was the craziest client that you saw that you've been working with?
So right now we have a gentleman who owns a auto body shop, collision center, and he has 17 cash advance loans. His obligation after discounted payments is $570,000 a month.
A month.
That's a month. Yes. And so we're working with him to restructure the debt and get him into new contracts, you know, and right now he's going to be paying us about $95,000 a month, you know, and we'll be able to take that money and pay all the lenders back in full and negotiate new contracts over an extended period of time. These were short-term loans. That's the worst, you know, the most I've ever seen. The good news about his business is that, you know, he had a rough time during the initial part of the pandemic, but things have picked up, and he has like walk-in business and also insurance company business, and people are going to get in car wrecks even though they're not driving as much. So he has enough, you know, through our program, he could save his business. Before that, there was no option. Even bankruptcy really wouldn't protect this particular business owner because he had so many positions. Some of the loans actually had clauses where they would have a security ownership of his business as well as personal guarantees. So,
wow.
And that's kind of what we do. We're an attorney-based firm, National Credit Partners, and we work with business owners who are in trouble, Brian. You know, business owners who are overextended on their debt, and maybe they could always pay it on time in the past, but now because of an uncertain economy, you know, forced shutdowns, et cetera, they can't pay their bills. And they have this kind of, you know, predatory type financing. This isn't a loan from Bank of America or Chase,
right,
where you can call your banker and say, hey, look, I need some time, work with me. These are, you know, structured as a purchase of future receivables.
right.
So there's not rules, there's not regulations. These, you know, loans are, they're not loans and they're not regulated. They were set up that way on purpose. So there's a lot of different collection activities these companies can take if you're not paying them on time. What we've seen happen during the pandemic is, you know, some of the lenders were understanding and magnanimous and willing to let business owners, you know, make lower payments, but that's ending now. The grace period is up. Pay us now, pay us when you owe us. Even if they can't afford it, they want them, you know, to make the full payments. So that's when we're able to step in and, you know, act as a shield to protect the business owner and get the lender to realize there's a hardship going on, that we're going to repay you in full, but we need to negotiate an extended longer term contract. It gives the business owner cash flow. The lender gets all their money back. And the business owner not only increases cash flow, they're getting a new contract. And when they get a new contract, their new payments are at least 50 to 70% lower than they were before. So now, if you're in lending, their debt to income ratio is improved, which allows them the opportunity to get financing in the future. You know, now they can get a line of credit or a term loan or an SBA. And they couldn't before because they had 5 different cash advance loans taking out $20,000 a month.
Right.
Now they have one payment they're making for $8,000 a month over a longer period of time. Now they're set up in the future to get better financing. They're off the hamster wheel of cash advance lending. It's a win-win for everybody.
So going back to that example that you mentioned about the auto, was it an auto repair?
Yeah, it's a collision center. Yes.
So if I heard correctly, you made their monthly payment go from $500,000 a month down to just about $100,000 a month.
Correct.
Right? So you dropped it down by a quarter of what it was.
Right.
So how does that work? What do you guys look at to be able to make that happen?
We look at the cash flow of the business, and then we look at the contracts and the lenders, and we look at, you know, what types of activities the lender can take against the business owner so that our attorney is able to protect them. In this particular case, because of the virus, everyone was writing really short terms. So most of his loans are 3-month terms. And he took out all this money, you know, that's supposed to be paid back in 3 months. And, you know, we knew that we could, sorry, I'm trying to get this phone call to stop there. We knew that we could, you know, looking at the lenders and our history with them, we knew that we could get them to agree to extend this out to 12 months if they're going to get full payback. And so that's how we underwrote it is, you know, we're going to be able to go to the lenders and negotiate, you know, a new contract with each of them spread out over 12 months. It's not that long. Everyone will get paid in full. Everyone will buy in to this, you know, because they have attorney representation. They're getting all of their money back, and we have a relationship and work with these lenders. You know, they know who we are. So
I think that's the key too, is that you build relationships with the lenders, so it's not just any Joe Schmo calling, let's say, Bank of America to say we want to negotiate a debt, right?
Correct. It took some time, and we're the only company out there, Brian, that negotiates for a full payback of the balance that is owed. There's other companies that do debt relief, where they go to the lender and say, "Oh, we can only pay you back 50 cents on the dollar," and the lenders hate that because A, they're getting a haircut. B, they gave these guys cash. This is right. This isn't a credit card. It's not a credit card. It is cash. And they're trying to say, we're going to pay you 50 cents on the dollar. You know, debt settlement or debt relief on these types of loans is a death knell for the business. Your credit's going to get destroyed. You're going to get sued. You're going to be blacklisted. And, you know, unless you're going bankrupt, there's no reason to ever do a debt settlement. If you're in trouble and you can't get more financing, or if you shouldn't be getting more financing because you're already dug in so deep, this is the best way to go in and restructure and come out on the other side okay. We have many business owners, Brian, who a few months after working with us are able to get an SBA loan or a factoring loan or get some type of, you know, invoice financing, AR-based financing.
Right.
And if they really want to go back and get another cash advance, we hope they don't. After 6 months of on-time payments in the new agreement, everyone's trying to renew them. So they're not blacklisted. It's a true way, it's a true win-win, and there's few of those in life where, you know, it's a success for everyone involved. You know, it only works if the business owner's in a hardship, though. You can't just decide, I don't like how high my payments are, I need better terms. That's not what this is. This is a consolidation for people in hardship.
So when you say hardship, can you describe what that looks like? I mean, do they have to be late already on payments, or can you show that they just can't afford to keep going with what they have?
Good question. They do not have to be late to qualify for the program. You know, looking at the cash flow and a decrease in cash flow is sufficient. We also do a lot of business with, say, construction companies, contractors, plumbers, you know, air conditioning. A lot of those people are on 60-day time limits to get paid, and sometimes they get pushed out, especially during coronavirus, to 90, or construction companies. So you could have all this money that's supposed to come in that hasn't yet, and that's your hardship. You can't make payroll. You try to get money, you call Pharus Global. We've got 1 million programs, we can't get you any money. But Brian, I'm not going to be able to make payroll. What do I do? Well, why don't we get you on the phone with Dennis, our partner at National Credit Partners, and see what he can do, and he can restructure those payments, cut your payments 50 to 70% while we, and they negotiate new permanent contracts. And so let's say you do get paid on all this AR 4 months from now, there's no prepayment penalty. Wow. You're in these new contracts now, the attorneys at National Credit Partners can go back to the lenders and say, hey, look, we actually have, we can offer you a lump sum for an early payoff, and now we can get a discount on the balance by doing an early payoff. So, that's a way to help the merchant as well,
So this is, the interesting part is that you're allowing the business to maintain their credit scores because
Correct.
Negotiating a better structure of the loan, but the lender is actually getting all their money back.
Correct. So the lender reports it as paid in full at the end of the day. It's not a settled for less. It's not a debt settlement. Their debt to income ratio is greatly improved when we negotiate and get into the new contract. And albeit that does not happen overnight, especially if you have 17 loans, but most of our clients have 2 to 5 positions. So let's say it takes 6 weeks to 2 months. They're in new contracts, and now they're in a position where if you know anything about financing or lending, debt to income, what you pay out versus what comes in, huge part of the underwriting, and so we've improved that, and that's putting the business owner in a stronger position. We're not a lender, so if you're referring someone over to us, and you're a lender, we can refer them back to you, to do the financing piece of the equation down the line.
So it sounds like any business owner that is even remotely contemplating the bankruptcy word, everybody hates to say it.
Right.
I guess, first of all, nothing to be embarrassed about because it's hard times, right? But also, before they make that decision, they should look at a potential restructuring before they file bankruptcy, right?
Correct. Yes. It's worthwhile. What we do, Brian, is we look at their cash flow by looking at their bank statements, and then we look at their existing contracts, and we just kind of see who the lenders are, what the term is. We have experience with all the lenders, so we have a pretty good idea of how far out we can extend it. So we come up with a proposal and a budget that fits what the merchant can afford and fits what we need to pay back the lender, in full. And then we present that proposal to the business owner. So there's no harm in looking at the option. And then you can weigh that versus bankruptcy, which is going to make you unlendable for 7 years or so and put you in a much more difficult position. Some people, that's all they can do. But if you have these cash advance transactions, which are not considered loans, they're not always dischargeable in a bankruptcy. A lot of them have personal guarantees, and you might think, I'll file bankruptcy and they'll go away. They won't always go away.
Right.
You can look it up online, is a MCA debt dischargeable? And the jury is out. It's not a slam dunk. Some judges hold that you can't include it, and they still might come after you and try and sue you or attach something, personal, because you have a personal guarantee. So this is a better option, than that. And as long as you have enough skin in the game to make reasonable payments that we can use to negotiate with the lenders, we can fix the problem.
That's awesome. Just real quick, if anybody has any questions for Dennis, this is a very important topic. Unfortunately, I think we're going to see more of a tilt towards the need more so than ever. Almost might be going back to like 2008 times all over again, right? That cycle of prosperity, I think, might be we might be tilting in the other direction. So
Yes.
definitely good to know, that there's an alternative to bankruptcy.
Yes.
So if you had to put a label on it, what are the actual qualifications for this program?
So we're looking for a business owner who's in a hardship, who has $50,000 or more in unsecured business debt. By that, I mean a cash advance loan. It can be a line of credit. It can be a term loan. It can be vendor debt. Most business owners are able to deal with their vendor debt, but let's say you're pretty far behind and you buy plywood from somebody and you've done business with them for a long time, but because of the pandemic, you're way behind on getting paid. And so you owe the plywood company a lot of money and you're trying to work it out. And now the plywood company's getting upset and they bring a lawyer or a collection agency in to handle it, because you can find another plywood company to buy from, but you can't just ignore the plywood company that's upset. So that's something, by bringing us in, you have direct attorney representation, Brian, and our attorney could go to the plywood company and work something out. By having an attorney represent you, having us go in and getting them paid, getting an agreeable plan, that's something we can help with. And then business credit cards, that's for somebody who's in a really bad spot where you're sinking in your business credit card payments, you can't afford the minimum payment. We can include that as well and take a look at that. Equipment, leases, and loans on a case-by-case basis, we can consider that.
Okay.
It just depends what it is. We have successfully done it before, but we turn down a lot of them too.
So in other words, commercial mortgages are probably pretty tough.
No, we don't. We can't do commercial mortgages. We can't do SBA.
Okay.
If you're a business owner who's supposed to pay has 20,000 in monthly obligations, and you only have $1,000 you can put towards the obligations, we can't help you because there's not enough money to pay the lenders. The lenders aren't going to negotiate a new contract and stand down if you don't have any skin in the game, But as I said, if you're paying 20,000 a month, we might be able to get you into a plan at 8,000 a month, saving you $12,000 a month. Or in the case of the collision center, go from 570,000 a month down to 91,000. So we can save, right? That's enough skin in the game where we can one by one get each lender into a new contract. Everyone's going to get paid. They're not happy about it. He's already defaulting, but they're happy to have an attorney working with them. They're happy to know they're getting paid. They don't have to chase the business owner down, and we're protecting the business owner's interest, making sure that the new contract is fair. There's not some poison pill in it. If you miss a payment, you owe the full balance again. We've seen things like that in there. So, the business owners need to be protected. Like I said, these types of transactions are not regulated. And, it's too bad that business owners have to turn to them, but you're right. It's fast. It's easy. People get desperate. They don't want to wait 2 months to see what their bank can do. So they get $50,000 from one of these companies and they got to pay them back $80,000 with daily payments.
Right.
So
I just want to give a quick shout out to Louis DiRamondo. Louis and I go back about 20 years. He's the hot dog king. He makes hot dog carts like nobody's business. So, hi, Louis. Glad you can join us. Anybody have any comments or questions, please feel free to drop them right into the comments. We'll get to them. So tell me, Dennis, what's the process look like? Is there any cost for a client for you to take a look at their situation?
There's no cost. It's a free consultation. Like I said, we're just looking at, are they in a hardship? Do they have $50,000 or more in, business debt? I mean, close to that. 35 or 40 we can look at, but we don't want to, if somebody only owes $10,000, it just doesn't make sense to hire an attorney-backed firm, to go in and do this for you. But yeah, it's a free consultation. Like I said, we look at 6 months of business bank statements. We look at your contracts and a short application, and then, the attorney, actually an underwriter, review your contract so you know what's in it. We found with one of our clients that 2 of the loans had blanket security interest, which means the lender had a partial ownership of the business until the loan got paid back. The business owner had no idea that this was stuck in there.
Wow.
So that's something that we informed them, about. And then we put together a proposal and we say, this is what we can do, and this is how it works. And then we go over, the pros and the cons. What's your plan right now? How will that work out for you? Do you really want to miss payroll, and wait for your AR to be paid in 60 days? Or do you want to, work with us and we can, get you started on lower payments right away?
Right.
So that's the process. So yeah, it's a free consultation. There's nothing to lose. I'm very knowledgeable. I've been here for over 2 years. We've been in this, business for 7 years, and we've built up since I've been here. Our relationships with the lenders have gotten stronger and stronger. And like I said, we're the only company in this space that negotiates for the lenders to get paid in full. So they like working with us. Right. Nobody likes it if a business owner's in trouble and can't pay the contractors, missing payments, but they do like getting all their money back on a slow pay better than they like, getting, the short end of the stick and somebody offering them 50 cents on the dollar, or a business owner, just stopping contact thinking that's going to solve it, because it's not.
I think one important thing too that you mentioned is the fact that it's not just lenders. So it's vendors, it's suppliers,
Right.
Be able to negotiate and keep those relationships also for future business, right?
Right. Definitely.
Instead of them souring the relationship, now there's a way to be able to fix that. And it's probably better by a third party than trying to do it yourself anyway, right?
Correct. And by having an attorney represent, and like we put together a hardship package that shows what the struggle is. So it's not just like, oh, I'm having a rough time, I need more time. Like, we'll document it. And then you have an attorney following up going, look, we want to pay you, but we need to set up a payment schedule that works for the client so he can stay in business. If he goes out of business, you're not going to get paid. Right. So let's work with us. Let's figure something out. And you're right. It is better having a third party. It is better having an experienced attorney, and they know that you're taking it serious. And everybody likes to hear the words 100% payback.
Absolutely. Yeah.
So,
no doubt.
So that's why it works.
So I know there's got to be people out there saying to themselves, well, I don't need this company. I can do this myself. Why is that not a good idea, I guess, is the question.
So cash advance companies are not Bank of America or Chase. As I said, they're not regulated. It's a purchase of future receivables. And the whole business model is designed to extract as much money out of the business owner as possible. That's why it has such high interest rates. That's why they take payments out every day or every week directly from your bank account. So when you're trying to negotiate with them, it's, it's the sheep walking in, or, you're allowing the wolf into the hen house. Like I said, I'm not saying that when the pandemic began that some of the lenders weren't allowing merchants to make lower payments. They were, but the thing is, how much did they charge in fees for doing that? How much extra did they add on to the balance? Did all of it go to your principal? And the worst thing is, it's not permanent. What we do, Brian, is we negotiate a permanent new contract. If you try to do this yourself and talk to the lender, they will never give you a permanent new contract. They will allow you to make temporarily reduced payments. What do temporary reduced payments do to you when an underwriter looks at your file? It's an automatic decline, because your contract says you're supposed to be paying $20,000 a month. But if they look at your bank statements, they see right now you're only paying $14,000. Why is that? You're declined. because you're not paying your payments you're supposed to make. When we get a new contract, that will supersede the old contract. It's like doing a renewal. And so your new payment at $8,000 is what an underwriter looks at. They look at the contract, oh, they're supposed to pay $8,000 a month. They're paying $8,000 a month. Okay, perfect. So this is their debt to income ratio. If your contract says you're supposed to be paying $20,000 a month and you're only paying 14 or you're only paying 3, you're automatically declined because you're breaking your contract.
Right.
So the other thing is we've seen insane poison pills, in agreements that, lenders offer merchants, insane poison pills. They'll say, well, here's a new contract, but really it's just an agreement to allow them to pull an ACH, payment, and there's no deadline on it. It doesn't say when it stops. It just says we're going to take this much. There's also, the ability for a merchant to double pull. For the lender to double pull, and that sometimes happens where they make a double pull of, what's supposed to be taken out. So,
wow.
And then we had one client who the lender let them do reduced payments, for a few months because of coronavirus. And then they said, we want you to pay more. We want you to go from $500 a day to $1,000 a day. And they said, well, we can't pay this. We can't afford it. And they said, you need to sign this contract by the end of the month. And so they were kind of hemming and hawing, and then they brought us in. The day after they told them, 2 weeks before the end of the month, they filed a UCC lien against the business to free up some of their receivables.
Right.
Before the deadline even came, because they wanted to put the screws to them if they didn't sign, and have them under their thumb. And so luckily we're involved and we're negotiating to get that, satisfaction on that lien and get them into a permanent reduced payment, less than the $1,000, they were trying to charge them.
So it sounds like the repercussions that would normally take place if people try to do this themselves, by going with you guys, you kind of leave them off in a direction where they can continue to run their business in a lot of cases.
Correct. It's also a relationship-based business. One of the law firms that we deal with, we probably have 15 or 20 clients with them. So if, you're struggling with your payments and it goes to, that law firm, you trying to negotiate with them, it's, futile. But we have 15 clients with them. We know exactly what they're going to do. We know exactly how to work with them. Same with the lenders. Lenders know us and trust us. It's just, it's about expertise and knowing, this isn't, I've said this is the third time I've said it. It's not Bank of America or Chase. That's different. Yeah. That's a traditional, conventional force. These are not traditional, conventional lenders. It's not even technically a loan. It's a purchase of future receivables. There's a personal guarantee on this. If they want to put the screws to you, they can come after, your assets. Some of them can freeze your bank account. Some of them can freeze up your receivables. So it's nothing to be taken lightly. Having, an attorney that is, that this is their wheelhouse is beneficial. That's why, you shouldn't try to do it yourself. And it's just not advisable, just like you might know how to, be a carpenter, but you don't want to build a house.
Yeah.
You need someone that specializes in that, especially with these, with these types of financing.
Got it. Well, we've got a few minutes left here, but I guess the question that's probably in a lot of people's minds, how much does it cost to work with you guys, and how does that work?
So it's a free consultation, and then we put together a program based on what the business owner can afford. And so our fees are a percentage of how much, whatever debt that, we enroll. And so it varies based on, the debt. I would say the average is, 20% of the debt amount. It's collected over a period of 6 to 12 months. It just depends, but there's exceptions made, and, we do have leeway. And oftentimes, Brian, we're able to negotiate principal balance reductions, not a debt settlement, but just as part of, our relationship. So we can offset some of the fees through our relationships. And let's say somebody pays, $15,000 in fees and we recoup 8 of it, by getting, fees waived because they bounced payments, and they got charged $3,000 for bouncing payments, in the past. We get that waived and then we get them a $5,000 principal reduction, by doing an early payoff. So we can often offset the fee. So we shouldn't, no one should get caught up in fees until we present a proposal and then look at the true, what it really looks like, what the true cost is, and what the true benefit is, because that's what it all comes down to. What's the benefit of our program, versus the cost?
And also, I think it's important in most, if not all cases, the fees are included in the monthly payment or that you provide to them in the proposal.
Correct. So there's no upfront fees. It's all cooked into, the reduced payment that, we've negotiated, and underwritten. So in the case of the gentleman, who's paying $570,000 a month, his $91,000 a month payment, or $22,000, whatever it is a week, includes the fee. So he's still saving, $400,000, more than $400,000 a month.
I'm sure he was very happy with you, Dennis.
Right. And so, like I said, this is a hardship-based program. It's not based for somebody that thinks their interest rate or payment is too high. It's somebody who's in trouble. And a lot of businesses are in trouble that shouldn't be through no fault of their own. We're a solution that can help you. We're a solution where we can provide you legal representation. This is our world and our wheelhouse. These, companies are not your typical lenders. You need a professional to help you navigate that. And the best news is, I would say 85% of our clients complete the program and finish getting all of their debts paid off. And now they're in a position where, they don't have any cash advance loans anymore. They've paid them all off. Now they can get an SBA loan or, a term loan or a line of credit. And, their credit is stronger because their debt to income ratio was, improved. Their loans are paid in full and, their business is healthy. That's what we try to do here, is help businesses rebuild. So this is a way to rebuild without, stabbing yourself with a knife by trying to do a settlement or file bankruptcy. This is a way to truly rebuild and get back to where you once were and, have a upward, trajectory going forward.
That's amazing. Well, we really appreciate you spending some time with us. So just to recap, no out-of-pocket expense.
Correct.
Third party, your company navigates the client all the way through from A to Z.
Yes.
Helps them avoid filing bankruptcy, which is what most of them probably think they need to do.
Right.
Peace of mind, because they will end up knowing what direction they're going.
And and they'll have a fixed payment too. It's like, this is your payment. It's not going to change.
And a discount potentially if they can pay it off early, right?
Yes, definitely.
And also the business can continue on going forward. That's awesome. I think definitely is going to be a really, really valuable tool in the future, not distant future either. So how do people reach you? I know we have it on the screen below, but what's the best way to reach you, Dennis?
So if you're a business owner and you're struggling, my phone number is on the screen. It's 949-763-4279. Or you can email me at dedwards@nationalcreditpartners.org. If you're a finance or business professional and you have a business owner that that's your client and you think that they could use this program, you can reach out to me directly and, we can talk about how we could make that work, through a referral directly to us.
Awesome. Well, thanks again, Dennis. And
You're welcome.
We are Pharus Global. You can find us at pharusglobal.com. we help businesses from the cradle all the way to the grave. So starting up all the way to the exit when you're looking to sell, and let Dennis help you navigate through the rough waters to be able to continue going forward. So thanks again.
Thanks, Brian.
Thank you all for being here. You can find us on LinkedIn and Facebook. And if you happen to be on YouTube, hit that little bell to get notifications, because we will be posting these videos there on a regular basis. Whoever would like to be the next guest on our Live at 5, Tuesday nights, 5 o'clock, Live at 5, let me know. We're happy to get you into the program. Thank you very much, everybody, and have a good night. Thanks, Dennis.
Thanks, Brian. Have a great evening.
You too.